Morning, good afternoon, and good evening to all. Myself, Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will continue our work using the indicator on balance volume, which shortly is well known as OBV. This is the second part of this series involving this indicator, and today we will be looking to build the buy side of the equation. We will see how we can implement the logic which I had discussed in the last session to execute the buy trades in a profitable manner. So the development so far includes this instrument subscription where the Euro USD is being used as the instrument of choice. Afterwards, the position amount was defined at zero to make sure there is no existing pending or open position on the account. We have these four OBV blocks of the varying candle periods and the look back periods to look at the OBV output over the given time horizon. And to look at the price volatility, we are also taking the help of these get historical candles of 15 minutes each. And then afterwards, these 10-second blocks to figure out, or you can say pinpoint the exact entry point for the execution of the trade. Let me give you a refresher of sort of what the logic is. The logic is fairly simple. First, we want to make sure that we are trading with the trend, and for determining the trend, we are using the OBV over the period of 4 hours. The candle period is going to be 4 hours, and we will compare the value of the last 4 hourly block to the block which closed third last. So that will have the interval of 8 hours in between the OBV output values, and for any buy trade to execute we will need the OBV value to be on the rise. That means the accumulation for the underlying instrument is happening, and we are expecting the trend to remain bullish for near term. So that's how we are going to rely on this 4 hourly time frame. Provided the 4 hourly conditions are in favor for the execution of the buy trade, we will utilize the lower time frame of 15 minutes when we see the divergence of sort happening when the price is moving lower but the OBV output has started to rise. And here we will not really be concerned with the magnitude of the OBV output, rather we will be dealing with its comparison, and we will take the last 15-minute blocks output value of the OBV and compare it to the OBV data of 2 hours back. So we will take the time interval of 2 hours, and if there is divergence in the price action and the OBV output value, then we will look for the opportunity to go long, provided the price action stabilizes and then starts to rise on the higher side. So here, as I had explained in the last session also, as you can see here, we don't really have the divergence of sort, and even if we look at this data, there is no real divergence here. So we will have to go back in time and see when we had the OBV value on the higher side, but the closing value of the last 15-minute candle was lower than the closing value of the 15-minute candle 2 hours back. I think somewhere here it might be the case. I'm not sure. So this is like the closing of 3 GMT, and if we compare the output value of the 3 GMT of the OBV to the OBV output of 1 GMT, and it is indeed higher, then we will consider the closing value and it is lower, so we have the divergence. And if this divergence is there, we will place the order on the higher side. So whatever is the difference between these two closing values, we will take the exact difference and add it to the last tick price, and that's where our order will be placed. So somewhere around here the order should be placed with the validity of say 2 hours, and this time around it didn't really sustain much, and it has declined, but we have additional condition of the 4 hour, so that should have also been met. Only if the 4 hourly condition was in place, this trade might have executed. So yeah, we can't really be sure if the trade might have happened early in the day or not today. So that's the logic is, and it will keep us on the side of the trend. We will be looking to trade with the trend and go for the buy trade when we see the conditions are optimum enough. Okay, so that's how we are going to deal with these formation. Now to implement this on the Visual JForex board, which has been developed by the Dukascopy Bank SA, we will need to add component blocks which are going to be mathematical as well as logical. We will take some mathematical components for the time being, and we will need to find out the difference between the closing value of the last 15 minutes and the closing value of the 15-minute candle which closed 2 hours back. So we need to figure out the difference. That means we have to deduct the candle 17's closing level from candle 18 candle close, and I'm doing this because we have added condition that the closing value of candle 18 should be higher than the closing value of candle 17, so we have to deduct candle 17 candle close from candle 18 candle close. Okay, so that's it, and we have to now look at the auto created variable, and here we have the candle 18 candle close, from which I will deduct candle 17 candle close, and it should be A1 minus A1 minus A2. Okay, battery saver on. Let me just find out the charging pin. Here it is. Okay, I got it. Alright, we resume our work, and I will name this variable as the byside difference. So it is going to be BSD, and this difference is going to prove very handy. We will use it multiple times to figure out various conditions. We will also use this as the stop loss and target price parameter. We will take twice of this difference as the stop loss. I think we can take twice, or you can even use different multiple, say thrice or 4 times. So it is going to be dependent on your criteria, your preference. I will take twice of it. Okay, so we take this difference and multiply it with 2, or let's say 3. As I said, multiple shouldn't matter much unless there is too much of a gap between these two closing values. And since we are dealing with the 4 hourly time frame on the larger side, I think going with a larger stop loss on the lower time frame should work in our favor, as it will keep the position safe, and we will take twice of the stop loss as the take profit. So we will have optimum entry as per the lower time frame while making sure that the trade is in conformity with the larger time frame. And we will also need the PIP conversion factor, which we will add later. So for the time being, we leave it at A1 into A2, and don't define this output value just yet, as the data type needs to be of the integer, and here it is of double, so we have to pay attention to this factor as well. Now we start adding the conditions for the execution of the trade, and for that we are going to need logical components. So I add this if blocks, when I am not sure at the moment how many of these we are going to need. So let's take 4 of these and we will add more as the need arises. So first thing first, we compare the OBV 10, which is the output value of the OBV for last 4 hourly block, with the OBV 14, which is the output value of the third last candle of the 4 hourly time frame. So this should be first input greater than second input, and then we move on to the lower time frame. Here we need the divergence to be taking place and the OBV value needs to be on the rise. I have this look back period of 1 and 9. 9 is because we are taking the time interval of 2 hours, and in each hour there are going to be 4 candles of 15 minutes each. So the difference is 8. Okay, and OBV 15 should be greater than OBV 16. First input greater than second input. Candle 17 and candle 18 closing values need to be diverging from the OBV values, and we need the candle 17 candle close to be lower than the candle 18 candle close. So I will take first input less than second input. Alright. Then we will place the order on the higher side as and when the price starts to rise above the last 15-minute candle close, and for that we will have to compare the closing values of candle 19 and candle 20 with the closing value of candle 17. So I will take candle 17 candle close as the common input in two of these blocks. And then compare it closing values of candle 18 and candle 19. First input needs to be greater than second input, and then here it should have been lower, first input less than second input, after which we bring in the trade command block, which is going to be pending open. We are not going to go for the trade straight away. Rather, we will wait for the price reversal to happen, and whenever the price starts to rise over next 2 hours and goes on to meet our predetermined entry point, the order will execute. So for that, we need to join it on the lower side. First input less than second input. Buy stop by bid. The price is now will need to be determined. We have taken into account this difference. Okay, and we will add this difference to the last tick point, and that will be our entry point. So I need mathematical component. Let's add last tick. tick bid, and to that we add the actual difference, and this will be A1 plus A2 okay. Candle 18, candle 17 difference, and this will be our buy execution point. So I will name it BEE. All right. Default instrument remains as it is. Trade amount I will change to 0.1 million. For Euro USD, 2 pips slippage should be good enough. Take profit and stop loss. This variable now need to be defined along with the order validity. We will create these variables anew. Prior to that, I will add, not add, I will just position these blocks on the lower side to make it a bit easier to look at and understand the flow of this algorithm. We also need to add the multiple action. Here it comes. I will join it for the buy side, but we leave it here for the time being. Now coming to defining of these three parameters: stop loss, take profit, and good till time, that is order validity. I will have to utilize this second calculation expression block which I had added earlier. Now we are going to take thrice of the difference as the stop loss. So I need to add the pip conversion factor. Since Euro USD has 4 decimal points, we will simply multiply it with 10 raised to the power 4, that is 10,000. Okay, to get it in the integer data type. Oh, I have committed an error. It should carry the name, not the value, and value needs to be on the lower side. Alright, sorry for earlier mistake. Now I have corrected it. I will get the variable, and this will be multiplied by A3. A1 into A2 into A3, and that's our stop loss. I will name as BSL. We will take stop loss, whatever it is, and multiply it with 2 to get the risk reward ratio of 1:2. Target price multiplier. So this will be A1 into A2 and the output value will be assigned to this variable. Now we have one more variable to define, which is the order validity. For that we need one more of the calculation expression block. And it's pretty simple. If you had seen earlier session, I have defined it multiple times. So there is going to be, we have to get the tick time, whatever is the tick time, we have to add 3.6 million ticks multiplied by the desired time variable, time multiple. So if you want to keep the order valid for 1 hour, then you have to add 3.6 million ticks to the last tick time. If you want to keep it for 2 hours or say 3 hours, then you have to multiply the 3.6 million ticks by required multiple. So for 2 hours, we are going to multiply the 3.6 million ticks by 2. I'm going to create new variable OV. It will carry the value of 3.6 million. All right. And it will be multiplied by 2 tm as the start value of 2. All right, so there is going to be a 1 plus a 2 multiplied by a 3, and I will define the variable here. Make sure it is of the required data type, which is long, and then we assign it to this output value to derive that value. Okay, all right. I think we are now good to go. So this will belong here, and I will join this block on the lower side. All right. So with this, we are done with the buy side of the equation for this algorithm involving the OBV indicator. I hope you have been able to understand the logical requirements and then the execution part of this algorithm. For any feedback, for any query, you can write back to me in the feedback section. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. For carrying out the testing, you will need to take the help of Visual JForex platform. It's a world-class trading platform. All these links have been provided in the bio. Do check it out. Thank you all for joining in. See you next time around. Till then, goodbye.